And on Tuesday, I got a new microphone, and MBS were down 11 basis points early. Stocks were also down 11. While the 10-year was pretty much flat in the morning, bonds were sideways to a slightly stronger overnight, with the biggest movement seen in response to bond auctions in Europe at 5:30 a.m. Eastern Time. Markets fell broadly after economic data from China was weaker than expected, while investors awaited an update to the U.S. debt ceiling impasse. The dollar edged higher. U.S. futures traded lower on Tuesday, along with oil. PacWest Bancorp fell as much as 16% in pre-market trading amid lingering worries about the health of U.S. regional banks. That was only good for a few basis points of rallying in 10-year yields, and that rally was erased by selling that began at the 820 CME open. April payrolls grew a surprisingly strong 253,000. The unemployment rate has fallen to a 55-year low of 3.4%. The rate of Black Americans hit an all-time low, and month-over-month wage growth was reasonably hot at 0.5%. But March and February job growth was reduced by 149,000 jobs, and the 3-month average employment growth was 222,000 jobs, the weakest since January of 2021. Very slowing gives the Fed cover to hold but not cut rates. The debt ceiling game of chicken a lot of people are talking about. Despite all the blubbering and posturing by politicians, markets know we won't default, and someone will blink soon to raise the debt ceiling moments before catastrophe hits. The day began with a strong bond auction in Germany, setting the tone for the overnight session. U.S. traders quickly pushed yields back in the other direction, but only modestly. Bonds remained sideways to slightly weaker until the 3-year Treasury auction at 1 p.m. It came out very strong, although in large part thanks to the weakness that preceded it. Nonetheless, it was enough to put the ceiling on the day as far as yields were concerned. At the end of the day, we were down 16 basis points. Stocks lost 19 points. Treasuries were pretty much flat. So at the end of the day, at the MBS 5.5 ended up at 100.53. Sets us right on that 50-day moving average, which is the relatively flat 50-day moving average, black line there. We have 4 very strong ceilings right above it, which are some strong averages. And then we did break through and test into the new territory before regaining ground today on the Treasury. If we go back into that wider range, it could have a big drop. It's all going to depend on what the CPI comes in tomorrow. In my personal opinion, bigger risk of it messing things up than improving things. Millennial homeownership is up to about 50% at this point, not far behind the level of Gen X and Boomers when they were the same age. Reasons vary, but include getting married later in life, 30%, holding off on having babies by 32%, a driver of homeownership, renting in more expensive locations, which the down payment would take longer, and holding more student loan debt, 46% of graduates back then versus 75% now. As you figure out how to get this cohort as a customer, it always helps to have some raw data to lean on. We also got a post from our sponsor at wellthatmakesense.com. How does the bond market impact mortgage rates? So if you don't understand all this stuff we're talking about today and want to know how the bond market impacts your mortgage rates, check it out at our sponsor at wellthatmakesense.com.